Hey everyone, Longacres Finance here with the November update to the quality dividend stock portfolio. Let's go. Let's jump right into the performance. November was an excellent month for the stock market. Whether this was fueled by the election or vaccine news, almost all stocks were skyrocketing. The S&P Total Return for November was 10.95%. The quality dividend stock portfolio came in a little short at 10.07%. While not quite as high as the S&P, a double-digit return in a single month is something to be excited about. My portfolio underperformed the S&P by 88 basis points. This marks 2 consecutive months of underperformance. If you have watched the previous QDS updates, you may notice that September and October performance has changed slightly, and that is because I went back and updated the calculations. The change is due to the methodology where performance is computed when cash is added into the portfolio, as opposed to before, where I computed performance based on when that cash was invested. Under this new method, the portfolio is penalized more for uninvested cash. So just a quick recap. QDS outperformed in September by 115 basis points. In October, the portfolio underperformed by 115 basis points. And in November, the portfolio underperformed by 88 basis points. Looking at the individual weeks during November, you can see the first week was excellent, with our portfolio going up over 7%. The second week was positive, and then we had a small pullback in week number 3, followed by another positive week, and a tiny pullback during the last few days of the month. On a cumulative basis, the portfolio is up 2.86% through month-end November. The S&P is up 3.68% over that same time period, so we are losing by 82 basis points. If you're new to my channel and like what you see, please hit that subscribe button to be notified of new content. Also, I would appreciate if you hit the like button to help promote this video in the YouTube algorithm. Let's take a look at the individual returns for November. As you can see, there is more green than red in November compared to October. To be exact, 12 positions beat the S&P and the other 13 underperformed. The best return in November came from Northern Trust. It was up 18.97%. And Comcast came in a close second, up 18.94%. Accenture was up almost 15%. BlackRock was up 16.5%. Bank of New York Mellon just came in shy of 14%. Fastenal was up 14.4%. Intuit was just shy of 12%. MasterCard was around 16.5% up. MSCI was about 17.25% up. Roper Technologies was just shy of 15%. T. Rowe Price was just over 13%. And Visa was just shy of 16% in November. ADP also had a double-digit return in November of 10.08%, but that was just shy of the S&P total return, so it didn't beat the market. The rest of the positions did not beat the S&P as well. And Lowe's was the only position that was down for the month. It lost 1.44%. Looking at the year-to-date column, 9 stocks are currently beating the S&P, with the other 16 trailing. ADP continues to be our best position, up 25.88%, but Comcast is in a close second, up 23.94%. And in third place, we have Graco, up 17.07%. The worst performing stock year-to-date is NOC, Northrop Grumman. It is down 11.36%. Second worst stock is Lowe's, it's down 9.33%. And the third worst stock, previously our worst stock, MasterCard, after a pretty killer November, is down 5.95% year to date, or since inception since September. Cumulatively, all 25 stocks were up 10.6% in November, which was 35 basis points shy of the S&P. And year to date, the equal allocation return is 3.06%, and that's down 62 basis points to the S&P total return. Let's jump over to the return summary. So our portfolio is losing by 82 basis points to the S&P after losing November, so that's 2 consecutive months of losses now for us. The portfolio also lost to the equal allocation return by 53 basis points in November, and that was the first month we lost to the equal allocation. So year to date for 2020, the portfolio is losing to the S&P total return by 82 basis points and to the equal allocation return by 20 basis points. With 1 more month to go in the year, it'll be interesting to see if we can make up some of these losses in December. Let's jump over and take a look at the holdings. The market value of the portfolio as of month-end November was $262.01. We had 55 cents in earned dividends and 2 cents sitting in cash. This is up around $60 from October month-end, which was around $200. Our annual dividend increased by 60 cents, or 18.52% from October, and currently sits at $3.84 on an annualized basis. This increase came from contributions and dividend increases. So in November, we had 2 dividend hikes. One from ADP, they increased their dividend by 2.2% from 91 cents to 93 cents quarterly, and Roper increased their dividend by 9.8% from 51.25 cents to 56 and just north of a quarter. You can see that we've had quite a few individual increases. About a little bit more than half the stocks jumped up. Home Depot was the only one that had a 2-cent increase. The rest of these are just 1-cent increases. Collectively, stocks in Schedule A here increased by 3 cents quarterly, stocks in Schedule B increased by 5 cents quarterly, and stocks in Schedule C increased by 7 cents quarterly, for a total of a 15-cent quarterly increase. The current yield on the portfolio is 1.46%. That is down from the 1.6 0.61% we had in October, but it's expected. Whenever the market goes up, your yield will come down. But the yield on cost is now above our current yield. The yield on cost shows you how much yield you're getting on the cash you actually contributed into the portfolio. So as you can see, that slightly went down from October, 1.53% to 1.52%, because the market was going up and the cash we were putting in was going in at a lower yield, so our yield on cost slightly went down. So let's take a look at the dividend activity in November. If you remember, we were anticipating to receive about 26 cents in November, and the actual amount we received was 23 cents. This is more than double the dividend amount we received in October. It's also higher than the combined dividends for September and October. Quarter 4 currently sits at 34 cents, and you can see it hovering over here above quarter 3, which we only had the September return in. We're expecting to receive 43 cents in dividends, or about 43 cents in dividends in December, and that will mean we'll probably finish just shy of $1, about 86 cents in for the year. But you can start to see the growth starting to increase here, even though we're still talking about insignificant amounts. In addition to tracking the dividend activity, I've decided to track the dividend growth announcements from the positions in the portfolio. Seeing how we started in September, the 2020 tracker won't include all stocks. As of right now, 3 individual stocks have announced dividend increases, and the average increase for these 3 stocks is 6.21%. I imagine we can possibly get one or two more increases in December, but this will be much more meaningful in 2021. That's it. Thanks for watching. If you have any questions, leave me a comment below. See you next month.